Hello, everyone. This is Gilbert Jalot from CPA Downtown. This is Tufts on Tax, where all your tax issues and tax questions are answered right here with Mr. T. Scott Tufts. You can call us at 877-647-7887. Again, that number is 877-647-7887. Or you can email him at stufts@cplspa.com. That's stufts@cplspa.com. Scott, how are you today?
Good to be with you.
Good to be with you too. And today we have a hot topic. It's since we just passed the tax season and the tax deadline. Questions the IRS ask you when filing your tax return. What can we say about that today?
So we've talked in the past about how involved tax returns are. I think it's oftentimes a computer-generated or electronically filed tax return. Folks know about that. They get the process done either through an accountant or through a software that the accountant uses or that they use. The process, though, with regard to particular returns is that there might be questions asked on a return. An example of that might be, do you have signature authority over a foreign bank account? We've talked about that. And that can be a yes-no question. When you have a business, there will be many questions to answer on the tax forms that the business files: partnership returns, S corporation returns, C corporation returns. And I think people are surprised when they see how many questions are asked of them like that. And then we have, of course, another issue, which is, do you have cryptocurrency or a virtual currency? Are you trading in cryptocurrency or, virtual currency, cryptocurrencies or whatnot? And that is a question of a yes, no. So these questions are part of the process, not just putting numbers down on a tax form. So this is why we try and get the word out to folks that the process of tax return preparation is data gathering, and so much the return is aimed at doing that.
Now, these questions, would the CPA miss any of this stuff that going through these applications? Well, would he need your help or need legal help if things get complicated?
Yeah, so there are a number of questions that so the process works this way. Many accountants send out an organizer in advance of doing the tax return that tries to get as much information as they can for someone's taxes. But invariably, that information may not come back, or that information may not come to them. So then they may have to then follow up and have a consultation with their client. Well, they get so busy because they're doing so many returns that may or may not get the kind of robust treatment that it needs. And invariably, the software drives what we call diagnostics. And the software that does the taxes will pick up, things on the return that need to be looked at. And so these questions that come up or these diagnostics that are kicked out by the software have to be something that comes to the attention of the taxpayer, because the taxpayer needs to know these things to be able to respond to them. So the give and take is important. But yes, a great example of that is if you have a couple that are divorcing, how are they going to prepare taxes, right? Before they divorce, will they do a joint return or will they do separate returns, right?
So you would be the person to help them with that?
Well, the lawyers that are involved in the divorce would have some experience with that. If the tax issues become complicated, if there's an innocent spouse situation where one spouse says, well, yeah, I know we did a joint return, but I didn't know about this, then they might have innocent spouse protection, which says that even though technically they would owe the tax, they would, because when you file a joint return, you're fully liable for the tax. You're jointly liable for the tax. Either one of you is liable for the tax. So the innocent spouse provisions are aimed at maybe looking at what's equitable in these situations where the spouse may not owe the tax in question.
So even though they would have lawyers and they're looking at that, all the forms and the documents, and they might have some experience with that. And if it passes a certain limit or a certain situation, they have to come. The lawyers will come to you.
Yeah, so it's kind of like a red phone or a situation that they know they're in over their head, or they suspect it requires a tax lawyer. There are a lot of lawyers who know when they need a specialist to come in, a tax lawyer to come in and answer a question or deal with it. At whatever stage. Can be before return, can be during the process of return preparation. It can be after the return preparation. It can be in a consultation. It can be during an IRS audit. It can be in tax litigation.
I see. So, I mean, what about average people that filing their taxes, they don't use CPAs or accountants, and then they are faced with all these questions on the forms, and they're concerned and nervous, and they have complicated situations if they have different properties or different arrangements. So, would they call you and ask for legal advice, or send you their documents so you can go through them and make sure everything?
Good question. So, from a technical standpoint, it would kind of like be like a general practitioner versus a surgeon. You might not call the surgeon when you have a cough. Right?
Okay, I see. That makes sense.
Right? You might say, I don't need surgery yet, but I have a cough. I need to get to somebody. So maybe the first step is, who does tax return preparation?
Okay, so you go that step first.
So I'm more of a forensic kind of person that can address particular issues and particular problems and that lead to litigation or that are very serious issues. But those are lawyer-specific type situations where that advice comes in. The garden variety simple questions, or the questions that are coming at them from just gathering in data, that should be a tax return preparer that does that. Something I do not do.
Okay.
So surprisingly enough, folks ask me that, and they'll say, can you help me do my taxes? Or they may say to me, well, Scott, you must be busy this time of year. You must be preparing all these taxes. And the answer is no.
Yeah.
I stay busy all year long generally, because tax questions come up at all times. In fact, I get really busy at the end of the year, because people are trying to close out a year, finish off doing something, and that year is going to cut off, and they need to get it done by that year.
Before anything, yeah.
So,
I see.
But let's raise one question that can come up. Sometimes folks have done something ill-advised tax-wise.
What does that mean?
Well, let's say that they thought that they were going to be able to do a transaction that they thought would not be taxable or something,
okay.
or capital gain and it's not, or something of that sort.
Okay.
If you can reverse the transaction before the end of the year, it might not count for tax purposes.
Oh, wow. Okay.
That's kind of an interesting thing that many of our listeners may not know. There's a principle in the tax law that, let's say you're...
Any transaction?
Any transaction, if you can truly put everything back the way it was before the end of the year.
Can you elaborate on that? What do you mean?
Well, it's kind of hard to say, but let's just say that you pursued some kind of transaction that was dependent on a certain understanding of the tax treatment. And I don't know, maybe a gift that's, or some kind of special treatment in law that you thought you would be eligible for, and everybody understood it to be that, but then it turns out that a mistake was made, and it didn't qualify by particular requirements.
Okay.
All right? You can get, if you can kind of all agree to fix it and reverse the transaction before the end of the year, there's a principle that says that transaction will be treated as properly rescinded.
And is there a form?
And that is why, if you go past the end of the year, each year stands on its own. So there are situations where someone has taken something, a deduction for something in one year, and it comes back the next year and it turns out they shouldn't have. It then is income in a following year.
I see.
So it gets kind of complicated. But the main thing to understand is that each year stands on its own.
Of course.
So what we've told folks is you get a K1 or you should have gotten a K1 and you didn't, then that year is very important for you to analyze. And as soon as you hit that 1231 point, it kind of closes the transactions for that year. So you have to respond to what happened that year. You can't bury your head in the sand.
Yeah.
Got it? So this is why, at the end of the day, we like for everyone to be proactive with their accountants, with their tax issues during the year to make sure they're dealing with things during the year.
And if they reach that they need you in a situation, they're in big trouble.
Right. Well, not always big trouble, but the way to think of how to distinguish between calling me and calling the accountant preparer is that if you want to say things to me that need to be privileged, that you don't want to be part of a preparation of a return that would not be privileged, you'd go see a lawyer. Make sense?
I see. Yeah.
You want to have confidential communications, you're going to want to talk to a lawyer.
Yes.
Not necessarily an accountant. Although accountants in Florida have an accountant-client privilege, you don't have a privilege when it comes to things that like a tax return with the IRS.
I see.
See that? So bottom line is, if you're talking to your accountant who's preparing your tax return, those discussions about what's on that tax return may not be privileged.
I see. Well, I guess we can continue talking about these things.
So the idea of questions on a return is just to get our audience to know that there are questions and information that go on a return that folks need to consider when trying to figure out not just the numbers and what they owe or taxes, but also be very sensitive to all the questions that are asked on a tax return.
All right. Well, you heard him, folks. You can always, to know more about this, you can call us at 877-647-7887, 877-647-7887, or you can email Mr. T. Scott Tufts. If you are in one of these situations where you have complicated questions regarding this and you want to hire him for a litigation or anything regarding tax issues, you can email him at stufts@cplspa.com. That's stufts@cplspa.com. You can find us on Apple Podcast, Google Podcasts, and also Spotify. You can hit the subscribe button on the YouTube channel if you want to keep receiving our channels. This is episode 25, and we're going to continue making weekly episodes. Again, you can call us at 877-647-7887, and we'll see you next time.